Hi, folks. Dan Bird here on Sunday, July 21st. Mr. Zuber is out today, so I'm going to do a solo one. Just one video today. Lots of changes last week, which I want to get into. Let me first share my screen and we'll jump into it, take a look at some charts and what's happening with the market. First off, we'll go to the website. For anybody that's interested, I put out the newsletter yesterday. Just go to breakpointtrading.net and click on this little box in the upper right, and you will get the newsletter. You can register at no cost if you want to be reminded, but you don't need to do that. If you just want to see the newsletter, just come here and click on that button. First thing I want to show, we had lots of changes last week and a big change today, of course. So let's start with that. Let's start with Biden dropping out of the race, which I think everybody was pretty much expecting. It's just a matter of when that was going to happen. So it will change the dynamics of the race. And I've talked about this before a number of times. So I want to show you the chart that reflects that. And this is the chart with a sitting president. So let me make this a little bigger and I'll put a pointer on here. So this is the NASDAQ composite. This goes back to 1971. You can see the green one is with a sitting president running. The market normally, that's the best scenario. Market usually ends higher for the year. You can see where we are right now. We're well above the mean. So this, by the way, comes from Stock Traders Almanac. And this was done at the end of June, so I kind of extended the line. We went up even higher beginning of July, and now we're right back pretty much to this low right here. And it says, are we due for a reversion to the mean? And I think that's what's going on right now. We're reverting to the mean. We're probably going to come back down around this area, down in here, sometime between now and September. And the market's going to be choppy. And typically, you can see on all election years, the black line down here, this is all years. So clearly, we're probably now going to drop from the sitting president green line down at least to the black line. The other thing to take note of, and I'll point this out on another chart, is for those that like to look for patterns, you can see a potential head and shoulders pattern right now. Even as much as we have run up, and the market needs to come back. It's just a healthy thing for it to do. But you see the left shoulder right there. You see the head right here. We're coming down right now. We might come down a little bit more. Monday, by the way, is typically the worst day of every month, going back 75 years. So, but the market is very overextended to the downside right now. So I'm expecting to see a rally. Probably pretty soon. Monday might be another down day just because historically it's a bad day, but I'm expecting to see a rally. So be careful trying to short something right now. And I'll show you why here in a second. The next chart here actually shows the difference between an open field, which is the red line, and a sitting president, which is the green line. So we're in July right here. You can see the green line is kind of going sideways. Beginning of July, it hit a peak, came down and hit a higher peak, which is exactly what we have just done. We are now coming down just like this is showing right here. But now we're dropping down to the red line. So on the red line, it actually continues to go down until actually into October, which is historically where the lows of the year typically are. But this year, I think it's going to be a little bit different in that I expect to see the Fed cutting rates in September. So it'll be September 18th, which will be somewhere right here in the middle of the month. And I think the market will actually start to accelerate higher, at least in the short run, may come back down a little bit in October and then continue higher into the election. Assuming nothing else dramatic happens, and something can always happen. So let me show you a couple of other things before I get into the potential of what potentially could happen with the market. And the first one I want to show related to inflation. Next week, we have the PCE inflation number, and I expect that to be fairly flat. I think the Fed will probably like it. The Fed meeting is on the 31st, so that's the next week after Friday. I think the Fed will probably still say everything looks great, everything's going in the right direction. We want to see just a little bit more data that's going to continue. And I don't think they'll raise on July 31st. But they could. I mean, they could say we are satisfied with everything we're seeing and we'll cut on the 31st, and that would be a surprise to the market. I don't think they'll do that. But anything can happen. So I do think they'll cut in September, though. And I've been saying that for quite a while. So first thing I want to show you is over here is the freight container index in relation to inflation. I haven't looked at this in a long time, and I looked at it today. So freight container index, you can see right here how it has been moving dramatically higher recently. So this is the cost for shipping goods around the world. And right now we're at the same level we were in September of 22. Now in 22, it was dropping, coming down, but now it's heading back up again. So don't know if that will continue higher, but even with this run up right here, that's going to add cost to finished goods. So the PPI might actually reflect that in the next couple of months. And it could then roll over into CPI and inflation if this continues. If it doesn't reverse and start coming back down. If it continues higher and starts climbing up the other side of this mountain on this side, that's not going to be good for inflation. That's something that's not normally talked about. It's something, it's kind of the underlying cost of things. Just something to watch and keep an eye out. Excuse me. The other thing I want to point out is the VIX. So, and I showed this in my newsletter this week. Take a look at the VIX lately. So you can see in this April timeframe when the market was selling off in April, the VIX spiked up above 20 very briefly, only for one day. It actually opened above 20 and then closed below it again. But it was in this, and for about a week or so, it was in this no man's land period between 17 and 20. Anything below 20 is good for the bulls. Anything above 20 is good for the bears. Basically implies that options are getting more expensive. It usually happens when the market's selling off. So the cost for options goes up. You can see also the other two charts that I added onto this, and this is one of the charts on my website. This updates every day. You'll notice the big line here, that's Friday, that's options expiration. That's often the kind of thing you see on options expiration. Very volatile, way, way, way down below any of the lows. And then all of a sudden it shoots a shot all the way back up above 17 and it ended at 1650. But the other two that I put on here, I'll start with the one on the bottom. This is the correlation with the S&P. So typically the VIX is inversely correlated, which means that if the VIX is going up, the market is usually going down and vice versa. When the VIX and the S&P become correlated, meaning they are moving in the same direction at the same time, that's very rare, but it normally indicates, it kind of gives an advance warning that the S&P might be reaching a top and getting ready for a decline. So that happened back over here in the February timeframe, and we didn't actually get the decline until the middle of March. So it took about a month, about 4 weeks here when that happened, right down here. It just happened here again. You see it starting to decline, getting back to normal, meaning that the VIX is going up and the market's going down, which is what's happening right now. But if the VIX broke out of this downtrend line as well, so it was just kind of moving along the bottom down here and kept trying to make new highs, but couldn't do it, but then broke out right here about 2 weeks ago, actually just a couple of days ago. These are daily charts. So we'll have to watch this to see if it continues higher. If we get more sell-off on Monday, this will probably end up above 17, up in this area up here. And then what I think might happen potentially, because the markets never move constantly in the same direction, so there is going to be a reversal at some point. And that reversal means the market will go up briefly and the VIX will come back down. The other thing to watch is the rate of change down here. So both the rate of change and the moving averages. So the rate of change now is spiking higher. You can see how it's been moving sideways. Rate of change here in April started to spike higher as well when the market was declining in that April period. We've started to spike higher again. We're actually getting close to the peak that we saw in April, but the market has not reached the low of April. So that means there could still be some more to go. And the moving averages down here, where they cross, that's typically where the trend change starts. So those moving averages are a 21-day and a 50-day. The red one is a 50-day and the blue one is a 21-day. See, they crossed to the downside, which means the market should have gone up, which is what it did. They crossed to the upside here, which means the market should go down. And it looks like this has just begun. So we may still have more downside left. Now, let me show you what the NASDAQ, I'll show you what the S&P and the NASDAQ look like on the home page here. Right here is the S&P. You can see right there, S&P last week before, everything was beautiful. It was hitting new highs. Even on Monday and Tuesday last week, it hit new highs. Then the last 3 days, moving right into options expiration. Kind of the same thing that happened last month around that time, but not as dramatically. But now it's below the 21-day and it's below the support line. So I drew in this area down here, which is an open gap. And it also happens to be where the 50-day moving average is. I think it probably will come down to that level or somewhere near there. And then we may get a bounce. We'll get a relief rally because the market doesn't just continue down. Same way it doesn't just continue up. It'll go up and then reverse and then go up again and reverse. I think that's what will happen here as well. If we look at that on the NASDAQ, it's even more apparent. So the NASDAQ now is even closer to that open gap down here and the 50-day moving average. I think it probably might get there on Monday. But then it may reverse. We get a relief rally. And look what the pattern will look like if that happens. If we get a relief rally on Monday, let's see right here. So we have a left shoulder right here. We have a head right here. If we get a relief rally sometime next week and it bounces back up again somewhere in this area, that gives us a right shoulder. Now, this is the thing to watch for. This is what technical analysis is all about. You want to watch for patterns like that. It does not mean that it will happen. It does not mean that if the pattern does happen, that it will follow through. It just means it's something to watch out for. If you think about it from a psychological standpoint, the market made a high here, pulled back, went up and continued and made another high and pulled back. So all the people that bought here are looking for a place to get out. And all the people that bought here are looking for a place to get out. They're probably saying, I should have got out here. So when this comes back up, these people and these people will start to sell. The other thing about if that happens, and you don't know if it happens until it actually goes up and then starts coming back down again. If it goes up and then just continues going up, then it breaks the whole pattern and it becomes nil, basically. But if it goes up and does start to come back down, then we have made a lower high. And that is the definition of a downtrend. Lower highs and lower lows. Definition of an uptrend, as you can see right here, higher high, higher low, higher high, higher low, higher high, higher low, higher high. This low was actually almost equal to this one, so it wasn't really a higher low. And if it continues lower, it's actually going to be a lower low, which I think it might. It might continue below that, making it a lower low. And then if we get the relief rally and it comes back up, but does not take out this high and starts back down again, then we have both a lower low and a lower high. And that is the definition of a downtrend. So that is just the beginning. These are the kind of things to watch for, especially when the market might, start a sell-off period. Doesn't mean it's going to crash. Just means we've got a period, and typically in the summertime, this happens between July and October, a period where the market sells off. For those long-term investors, you don't have to even worry about this. This is just noise. Stay with good companies and stay invested, and you can stick with it. For those that are trend followers, this is the trend. This was reversing the trend. So if you're a medium-term investor, you might want to step aside, go to cash, and then wait for this to play out, maybe by September, if we get the rate cut in September, and then step back in at that point. And everybody has their own method and their own way of doing things. So let's go back and take a look at what happened in 2022 when we had a cyclical bear market in 22. So this is what the market was doing. Let me turn on my pointer here. So here's the market in 21. 21 was a raging bull market, just like we have now. We had a higher high, then we had a lower, and then we had a higher high, and then a higher low. A high that was equal, a low that was a little higher, and then a higher high again. So think of this as where we are right now. This is very similar to where we are right now. We came down in beginning of 22 and put in this low here, and then had a relief rally. So these are daily charts. So the relief rally only lasted a couple of days, but we had a relief rally right there, and then it started to go down again. So there's a lower low and a lower high. It went down here, made another lower low, came up again, couldn't get through this, that's what was now support. So that's another lower high, another lower low, put in a high here, but notice now it's making a head and shoulders. And from this point forward in 2022, and this is April, just continue to go down until October. I think that is similar to what we are about to experience right now. Here's what happened in 22. So here's the warning signs right here in this big red circle. I think that's what we're getting right now, some warning signs. And it's up to us whether we want to heed them or not. For me, I am planning to step aside. There may be a rally next week because the market doesn't just continue down all the time. So we will get a rally at some point, and it probably will make a lower high, which once that happens and it starts going down again, it's going to go even lower than it did before. So if we get that relief rally, that's the time to move your stops up or move to cash or anything that you want to do to protect yourself. But this is what happened in the cyclical bear market from basically January until October. Now this time it's going to be from July. So basically this section right here. And if we look at this, it's sort of this area right in through here that we're at right now. And this may continue down into October. But that's what I think is going to happen. That doesn't mean it will happen. Market can do anything it wants, of course. So we'll see. So last thing I want to take a look at is something that I put on the website a couple of weeks ago, which I call the trend models. And these, I've had some questions. I've had a lot of people say they really love it. I've had some questions from folks saying, can I use this idea? Can I use this for just regular stocks? And the answer is absolutely you can. So we'll take a look at these right now. The indexes first. So what this shows you is a short-term, medium-term, and long-term trend. And it defines what those mean. And short-term is pink, medium-term is blue, and long-term is red. You can see highlighted in yellow is these changed last week. So you can see the NASDAQ gave a short-term down signal on Friday. Bitcoin gave a short-term up signal last Monday. Medium-term is still down, but it's moving up again. And the volatility index, the VIX that I talked about before, gave a medium-term up signal. So remember, when the VIX is going up, the market's going down. But you can look at every single one of these. So if we look at the S&P, when the pink line crosses the blue, that's the short term. So you can see the up signal was given back here in May. When the blue crosses the red, that's the 21 crossing the 50. That's the medium term signal. So you could get in on the short term. Short terms a lot of times can whipsaw. So you have to be prepared for that. But you can get in on the short term, or get in half of your position on the short term and get in the other half, full position on the medium term, and just ride it up. The short term has not triggered yet on the S&P, but one more down day and it will. Notice on the S&P, left shoulder, head, If we get a relief rally down here where the neckline is, which is at about 543 on the SPY, or 54, roughly 5,400, and it moves back up, then we may make a right shoulder. The next one is the NASDAQ, the Q. So that one did give a short-term down signal on Friday. That's already given the signal. And you can see on the other indicators here, they're all the momentum indicators are also implying the market is heading down. In fact, this one triggered even a week earlier. And this one triggered about 2 days earlier than this one here did. So that's just reinforcement. Here's the Dow. The Dow's actually held up better than the others, but it's rolling over as well. Russell 2000. Sorry, I'm just getting over a cold, so still kind of coughing a little bit. Here's the Russell, and interestingly on the Russell, if you had been just watching these, and you can just watch these after the close. These get updated after the close every night. So it's not something you have to sit at your computer and watch them all the time, but you can watch after the close, and you'll notice that the Russell 2000 right here gave an up signal on July 10th. And by the way, that was the day when the CPI number came out better than expected. So if you thought that the small caps were going to take off as a result of that, there's your short-term signal right there. You could have got in right here and ridden that all the way up to here. So that's from about 204 to 224. So roughly about 10% in a week. Now it's starting to come back down. So it's giving back some of those gains. But that's the way to use the trend models. Here's the Magnificent Seven right here again. And you'll see when I get to those stocks, all of those are starting to roll over like this. So it's moving down as well. It probably one more day and it will give a down signal. You can actually see it. If you looked at these after the close every day, you could actually see right here, the pink has not yet crossed the blue, but one more day and it will. In fact, even if it was an up day or just sideways day, it's still going to cross over. So Monday is going to get a down signal on the Magnificent Seven. This is an ETF that you can play that with. Bitcoin is actually going the opposite way. So Bitcoin's going up, gave an up signal right there. They give up medium term in a couple of more days if it continues up. Gold is heading down again. So we'll see if that continues. And you can notice the momentum indicators up here too. Sometimes they cross even before you get the signal down there at the bottom. So there's gold. Here's the bonds. Bonds were looking good. They rolled over a little bit, have not given the down signal yet. Here's the 10-year Treasury starting to move back up a little bit. And the VIX, which we talked about. Now, the next one are the sectors. And interesting that almost all of the sectors, they were the defensive sectors were actually doing well earlier in the week. But by the end of the week, just about everything was going down. So technology right there gave the sell signal 2 days ago. Here's communication services. It is right at it. Has not quite, actually it has. So this one here should have a down signal as well. Just barely, but it did give a down signal on Friday as well. So I can actually put that in right here. So that now has a down signal as well. That's where the internet stocks are. This is consumer discretionary. This is where Tesla and Amazon reside. Consumer staples was doing great during the week. The last 2 days, it's started to come down. Here's utilities, one that's kind of held in there pretty well. Healthcare was looking great. It's kind of rolled over too. We'll see if that continues. Energy started to go up. Friday started to come back down. Here's materials, where gold is. It was doing great. Last 3 days coming down. Industrial, same thing, going up. The last 3 days is coming down. Here's financials. Financials actually has been doing the best of all the sectors lately. And real estate actually is one of the better ones, believe it or not. And this is a result of the good CPI number and the potential for lower rates. So finally, we'll look at the Magnificent Seven plus a couple of others. Google, Google's been coming down for a while, week and a half, basically. It's basically given back about 2 weeks worth of gains. There's the down signal happened on Thursday. If you were watching this, you actually could have seen this cross up here prior to that. So you might have anticipated that. Here's Amazon. Amazon was really one of the better ones. And it just rolled over here about a week and a half ago. Gave a down signal right there. Apple has not given the down signal, but starting to roll over. Meta, same kind of thing. I mean, these all look similar. Microsoft, down signal, had a terrible day Friday, of course, with the CrowdStrike issue. NVIDIA is kind of holding its own, but dropping down some. So it has given a down signal right here. Now, NVIDIA typically, historically, starts to run up about 3 weeks into earnings. Earnings are, you can see right up here. Oh, earnings are the 28th. This was the 21st, so they pushed it back. So 3 weeks before that is around August 7th. So we're still 2 or 3 weeks away from that starting. So NVIDIA could actually pull back some more, maybe back to this open gap down here at 110, maybe even to the open gap down here at 95, between 95 and 100. There's a potential that that could happen. Now, I think we're going to get a relief rally next week. So NVIDIA is going to appear like it's recovering. But I think like the rest of the market, it will probably roll over again after a few days of recovery. But just about 3 weeks before earnings, I'm expecting NVIDIA to start moving up like it always does. Tesla actually was holding in there pretty well. One thing I mentioned on my Zoom call was that Tesla, if you look at that on a long-term basis, there's highs right back here for Tesla. And I said then that it looks like Tesla is forming, or potentially could be forming, a cup and handle pattern. If I find the right one. So here's the cup right here. Make this blue. And I said at the time, and when I said this, Tesla had not even reached the peak over here. But I said the peak is right where this horizontal line is, which is at about 260. It had not got up there yet when we did the Zoom call, but you can see it hit it almost exactly and got rejected. And what I said was all the people that bought Tesla back here and it went down, came back up. Some of the people over here sold here, but some of them didn't. But the people that were buying there, and all of these people here, as it went all the way down here, were just waiting for it to come back to break even. It did. It came back up and they all sold. And then it went even lower and then formed a cup. And I said, the thing to watch on Tesla, and remember when I said this a couple of weeks ago, it had not even reached the peak yet. But the thing to watch is, will it form a cup? Which means all the people over here that want to get out breaking even, they're selling right now. But there's probably a lot more people that think that Tesla is going to go much higher. And if this happens, and I want to stress if, because this is not saying that it will happen, but if that happens, and it comes down, maybe down here to this 20-day, 21-day moving average, somewhere in this area, and then reverses and starts going up and then takes out this very strong support that goes way back here to last year, then there's lots of buy orders sitting right above this resistance level, people waiting to buy, and all the sellers will be gone. That's how cup and handles work. And this is what's called a measured move. So you can take roughly 150 to 260, 110 points, add that to 260, and you get 370, 380. So that's potentially where it could go to. Now, it's not saying when it will get there. It could take another year to get there. But potentially, if it breaks that cup and handle, and if, it's a big if it breaks that cup and handle, then that's the potential of 110 point gain. So the way to play this is number one, and this is a big pattern that Investors Business Daily loves to watch. The way to play it, if this does start coming back up, And you want to watch as it's coming down, if it's going to do it on low volume, which it looks like it actually is. You can see down here. So you want the cup to form on low volume, and that's happening. You want it to start to rise back up. So you can play it as it's rising up the right-hand side of the handle. It's riskier because it may not break out. Or you can play it after the breakout, when it actually closes, the first day that it closes above that resistance line of 260. Get in right there, and that's where a lot of the buy orders are, I think. And when that happens, Tesla will then probably go back to the highs, the previous highs back over here, which is around 380. So anyway, it's a way to play Tesla. Tesla, again, is pulling back along with everything else. Netflix, we thought after their earnings, they had good earnings, but not great forecast. Looked like the next day it really was going to take off, but then it reversed and ended lower, much lower. So very much like everything else, all the other Magnificent Seven, all the big tech names look very similar to this. So this one may continue lower as well. AMD, awful. AMD looked like it was really going to start screaming higher again, maybe go back to the old highs here. But instead, reversed a gap down, just has kept going. You know, it's right on the 200-day moving average. So if it closes below that, that's really a bad look for AMD. But again, and that may happen on Monday. So the thing to watch, not only at AMD, but a lot of these stocks, watch for a hammer. If you can see this little candle right down here, it's at the bottom of a downtrend. It looks like a hammer, which means it sells off and goes all the way back up. By the end of the day, it's actually closing higher. Makes a symbol that kind of looks like a hammer. See if I can find some other ones. Sorry. There's one over here that's kind of looks like a hammer as well. But if that happens on AMD or any of the other stocks, if they sell off on Monday, but by the end of the day on Monday, they come right back up and form what looks like a handle, then that is a reversal candle. And that is a great time to get in because it's very low risk. You can put your stop right below the low of the day. And the hammer implies that the next day, you could wait for the next day just for confirmation, make sure it's going up. But if it is going up, it probably won't come back down there. And if it does, it's very close to your entry point. So very minimal risk in that case. SMCI actually hung in there pretty well. It's kind of going sideways. Oracle has a shooting star. So this is the opposite of a hammer. And this means that it rallied during the day and then sold off by the end of the day, which is basically a reversal, a continuation pattern in this case, because it's been going down. So that implies that it's going to continue to go down. And it's almost ready to give a short-term signal. In fact, it will probably give us a short-term signal on Monday, no matter what happens. Palantir is the one that's hung in there better than any of them. Interestingly, it too has a shooting star, which is the opposite of a hammer. So this could be a reversal candle for Palantir as well. So the key thing is all the big tech names look like they're rolling over. They probably will continue down. If the market does make that rally and then reverses and makes the lower high, then all of these are going to continue lower. But at some point, maybe between now and September, they're going to hit levels that you probably would not be comfortable buying, but that's usually exactly the time that you should be buying. So the time to buy is when you don't think you should be. One last thing I want to show here, I put in the short ETFs down here at the bottom left of the charts page. And it's pretty amazing. If I look at QID, actually, let's look at the semis. So here's the semiconductors right here. You can short the semis. Look how symmetrical that looks. So I put the short ETF. That means you buy it just like a stock, but it does the reverse of what the stock does. So if semiconductors are going up, like they were here, this is the long ETF, SMH. Semiconductors are going up, this ETF will go down. But if semiconductors are going down like they are right now, this one will go up. So that's a way to play the market even as it's selling off. We can look at gold, for instance. You can really see how symmetrical that is. So gold, the long side is heading down. but you can play the short side by buying GLL, and that will go up as gold goes down. So same thing with any of these. Same thing with the, look at the NASDAQ, which is right here, QID. So there's the NASDAQ. Here's the Qs. Qs have been heading lower. QID has been heading higher. So that's, and again, if you look at the chart, which is very similar to the trend model, and you use the same idea as the trend model, then on Friday, you would have a short-term up signal right there and a short-term down signal on the long side. That's what it looks like. It's using the same idea as the trend models, just applying it to anything else, any other stock, anything that you want to, basically. So that's it. I think, again, the market, we'll see how it takes the news. I don't think anybody's surprised by Biden stepping out. Looks like Kamala Harris will be the, at least for now, will be the candidate. We'll see how that goes. I think in general, the market won't like it, but I think the market was going to go sideways or down for the summer anyway, until the rate cuts kick in September. And then we'll see what happens at the end of the year. So we'll see how the market takes it on Monday. It could go down initially and then back up by the end of the day. So that's the thing that I'm watching for if that happens. And then I think it will have a little bit of a rally and then roll over and start to go lower once again. So we'll see. It doesn't mean it has to do that, but it may do that. All right, that's it for now. Leave any comments that you have down below on the YouTube channel, and any questions that you have, I'll try to answer them on the channel as well. And if you want to get the newsletter, you can just go to breakpointtrading.net or look at any of the other content that I have out here. There's tons of content, and I'm always adding things to it. Like on this portfolios page, I put the VectorVest signals in here for those that follow VectorVest. Right now they have an up signal, but that could soon change to a down signal. You can see the first criteria of the buy-sell ratio is already turned red. And then what I did, this is a chart that I created using VectorVest percent buys, percent sells that they post every day. Every day I update this, and I actually show a chart with the buys and sells, sells in red, buys in green. Where they cross, you can see typically that's when the confirmed up and down signals happen. It took a little longer here in May, but they just crossed again, just Friday. These just crossed again. And then the blue line is just basically adding these two together just to see how they trend together. So that kind of graphically shows you the buy-sell ratio and where we are. And that it kind of implies, this right here implies that we may be getting a confirmed down signal soon from VectorVest as well. So let me know if you have any questions on anything. Thanks for stopping by, and hope Zuber is having a great weekend. And we'll catch up again next week. Thanks, everyone.